Hello, shiny happy people. I hope you're all doing fabulous on this lovely August day. I have been getting a lot of questions about the interest rates and how it is affecting the market. And my generic answer, honest answer, but kind of generic answer is I haven't really seen an impact. Houses are still selling very quickly. We still have a lot of activity going on and things to that effect. But looking at an overall market when it comes to something like interest rates is not necessarily the most accurate, because when you're looking at the overall market, you're looking at everybody's housing situation, regardless of their price point or whatever. And what is more logical is that we look at specific price points, because the higher interest rates are going to affect, most likely, first-time home buyer, workforce housing category of home buyers than it is going to affect move up or higher end housing. Just the natural ratio of debt to net income and things to that effect. So most likely this increase in interest rates is affecting specific categories or price points of houses as opposed to the market as a whole. So I did whatever it is that I do, and I dug down into the numbers and I looked at historical sales data to compare with last year with this year to see how that panned out in different price categories. So I decided to go with the second quarter. I wanted more than a month, but I thought if we looked at the full year, because the beginning of the year, the interest rates were still low, we were still really tight. The second quarter is really where those interest rates will have started affecting us. As far as that goes. So I looked at the second quarter of 2022, so that's April 1 to June 30th of 2022, as opposed to the second quarter of 2021. I only looked at unit sales and I broke it down into pricing category. So I looked at price categories of anything under 200,000 was category 1, then 200 to 300, 300 to 400, 400 to 500, then I looked at 500 to 750, and 750 and above. I did break it down into detached and attached houses so that we can look at both of those. The only price point that was affected in the attached houses category was the first one, the under 200,000, which honestly, that's most townhouses anyway. If I really wanted to dig into townhouses, I would probably want to break those categories down a little bit more. But those units dropped by 58% comparing those two quarters. So second quarter of 2021, there were 62 attached units sold as opposed to 26 in the second quarter of 2022. So that is a pretty drastic increase. That same price point was one of the higher categories affected in the detached category. There were 15 fewer units sold, 62 units sold in 2021, 47 units sold in 2022, that quarter. So that's about a 24% decrease, if I can read my writing correctly, although that might not be right, so don't quote me on that one yet. But the 200 to 300, there was a 21% decrease in the detached category from 82 units to 65 units. The most affected category, however, in the detached housing sector was the 300 to 400 range. That dropped 37% from 92 units in 2021 to 58 units in 2022. So these lower price points were affected the most. The upper price points, 400 to 500, there was actually more volume, 7. There was more volume of 1 unit and 3 units. So those really, in those categories, were not affected at all, but those 3 lesser categories were affected the most. So that breaks down then specifically what price points the interest rates could be affecting. Now, this is not necessarily 100% because of the interest rates. There could be a lot of other factors, but it's probably one of the larger factors that affects these. So hopefully that helped. Hopefully that answers some of your questions. If you are in these price points and you have found yourself frustrated because you were looking at one price point, but then the interest rates changed and now you're looking at another price point, I do strongly encourage you to talk with your lender about other options. I had done a video about ARMs, adjustable rate mortgages, not too terribly long ago that might help kind of open up your affordability range, especially if you're not going to be in your house, you don't think, for more than 3 or 5 years, which first-time home buyers aren't. So my point is, do not despair. Yes, the interest rates are higher than we anticipated. Yes, they are higher than we have seen in the last 20 years. but they are still historically low and they are still under 6%. And that's just, they're still really great rates. I mean, they are still historically low rates. They're just not as low as we've gotten spoiled to over the past 20 years or so. So hopefully that helped. If you have any questions, you know how to reach us. You enjoy the rest of your day and take care.